Welcome to part 2 in a series of videos designed to help you understand how to use Fibonacci in your trading. In part 2, I'll be doing a deeper dive into the Fibonacci Retracements Tool, which is a built-in drawing tool inside of ThinkOrSwim. Now, quick recap for those of you just tuning in. In part 1, we discussed the Fibonacci sequence, talking about where it originated from, and we connected it to trading. You can find a little bit more information on the blog post for part 1, and I recommend following along with the text portion of this with the video tutorial. I think it helps to reinstill some of these concepts. But anyways, we had the rabbit riddle here in part 1 to establish the Fibonacci sequence. We then used the sequence to calculate the Fibonacci ratios. And in part 2, today's video, we're going to be taking those ratios and plugging them into our Fibonacci Retracements tool to try and get some concrete price levels that we can use to try and make some better trading decisions. Now in part 2, today's video, when we discuss the Retracements tool, my goal is to try and give you a fairly thorough and comprehensive guide to this. We'll start by first discussing what the Fibonacci Retracements tool actually helps us measure and how to go about thinking about these retracement levels. I'll share a silly but I think useful analogy there, which hopefully helps drive home some of these concepts. After that, we'll move on to talking about some of the more common trade ideas that I think a lot of Fibonacci traders like to use. And after that, my goal is to try and continue building a little bit more confidence here and do one example where we calculate the retracement levels from scratch. This should hopefully give you a good understanding of where these levels come from, so that when you go about plotting them on your own charts, when you look at things like clusters, they make a lot more sense to you and you have a bit more confidence to take the trade supporting these ideas. Finally, after spending all of this time building a good foundation, we'll then move on to configuring our chart. I'll show you the exact settings I like to use for my retracement tool, all the way down to things like what lines are what color and what lines are what width. Once we've done all of the grunt work there, we'll move on to actually applying these tools, and we'll go through 4 different examples. These are going to be 4 examples in 4 different markets and 4 different time frames, which hopefully tries to tackle the Fibonacci Retracements tool from a few different angles. Now let's get started with first understanding what Fibonacci retracements are and how I think a good idea to think about them is. Now, Fibonacci retracements, I like to say, provide you with a nice roadmap for where you think price is likely to go when it retraces its steps. This is different from the Fibonacci extensions tool, which we'll talk about in part 3, but the extensions tool, I like to say, helps extrapolate price action. It helps you compare previous swings and extrapolate where you think price is likely to go based off of what it's done before. The retracements tool is useful for taking 2 inputs, a swing high and a swing low, and using that to get an instant roadmap for where you think price is likely to go when it retraces its steps. Now that leads me to the silly analogy, but bear with me here. Let's assume our swing high is point A, and let's assume our swing low right here is point B. Imagine there's a family that's gone on a road trip. They've gone already from point A, which is their home, to point B. Now they need to return back home. The question is, where do you think this family is likely to take their breaks? And that's what I think the retracement levels help you understand. It gives you a roadmap of places where you think price, or in this analogy, the family, is likely to take a break, along with some places, like say the 50% mark, where price, or in this case the family, is likely to take a longer break. Now, the extensions, the projections, beyond that 100% mark, so beyond even our swing high, help you determine where, say this family's already retraced its steps, where is this family likely to go next, or where's their road trip destination likely to take them next. So that's where we have these 2 different examples or 2 different use cases for the retracements tool. The first is it provides us with support and resistance levels, and we can see as price went up or retracing its steps here in IWM, that 0.236 acts as a resistance zone. We break above it and that 0.382 level starts to act as our next resistance. We break above that and that 0.50 level acts as our new resistance. That 0.382 also begins to now act as support, where price bounces from those zones. That 0.5 acts as resistance, and then we break above it. And all across this entire road trip, if you will, we've hit the support and resistance zones with the Fibonacci ratios. Part 2 of this is what we just alluded to, which is targets beyond our existing highs and lows. So this is where the 2 extensions that we've talked about so far, the 1272 and the golden ratio, that 1-6-1-8 ratio, come into play. These are both places where they give you longer term targets even beyond what we can currently see with our swing highs and swing lows. So that's what I think a good general way of thinking about the retracements tool is a road trip that price action is taking in places where it's likely to stop along the way. Now that begs the question, what are some common trade ideas here, some easy lower hanging fruits that you might be able to take advantage of? The first one, if we pull back our example of IWM, is the idea of that 50% mark serving as a key resistance zone. It just makes a lot of sense, even though it's not a true Fibonacci ratio, that when price retraces about 50% of the way there, there's likely to be a deeper pause. It's easy to be picked up by things like algorithms, in fact all of these levels are, but that 50% mark in particular catches a lot of eyes. It's also just a clean level that you often hear referred to as, oh, we've retraced back up to 50% of our swing high to swing lows. The 618 ratio, the inverse of the golden ratio, also comes into play here. So using some of these key levels, you might be able to craft a trade where A, if you're already long, you're looking at taking some profits, knowing you expect price to be a bit choppy. Or B, if you're not already in a position, you're using these levels to try and execute new positions. Say something like theta positive positions, looking at these levels to hold and to provide price to chop either in between or away from and collect some of that theta. So just a few different ideas. We'll talk about a lot more ideas in parts 4 when we talk about Fibonacci clusters, but this is one general concept. Using that same notion, you can also use things like the golden ratio. So that 1-6-1-8 ratio as that potential magnet where you think price is likely to exhaust. And we can see here, once price does hit that 1-6-1-8 level, we stay there for quite some time, basically from the beginning of 2021 all the way up till about April. We're more or less chopping in between that 1-6-1-8 ratio. So it holds significance and can also help you with understanding potential levels that we might have in play, especially when we're above previous swing highs or swing lows where they overlap with some of these nice ratios. And finally, point 3, one that I briefly alluded to, but here's a visual example, are Fibonacci clusters. That's where we combine the Fibonacci extensions tool with the Fibonacci retracements tool to try and find some of these zones. I'll show you how to perform this exercise on plenty of different examples in part 4, but here, just use these zones as pre-built clusters where you can see what happens when the NASDAQ hits each of these zones. When price tags it for the first time, we see a bounce. Price tags it a second time, we see a second bounce, this time back up to, again, the golden ratio. Then we have price break through this time to our second cluster zone, and from there we can see one more time that zone holds, price bounces above, and that zone gets tested one more time. So done correctly, these zones can provide you with a very nice roadmap, almost a blueprint of where you expect price to go when it retraces its steps in a swing high to swing low. And if you can catch one of these quote-unquote waves where the retracement and the extension levels are working in tandem, that allows you to capture a good portion of some of these moves and play them in a very systematic process. Now, hopefully this has convinced you why you should use the retracements tool or why it has some merit. Now let me talk about how it's calculated so we can go about applying this on our charts. The calculation for this is quite simple. We take our Fibonacci ratios that we've already calculated from the sequence and we convert them to price levels. There's a fairly simple formula that we use for this, and for that let's use an example here. Our swing high, let's assume, is say at 120. So I'll draw 120 right here. Let's assume that's our swing high. Our swing low is at 100. So let's assume that point is right down here. Now we draw a line in between this 120 and 100. And we'd like to find what is, say, that 50% mark in between these levels, or even something like, say, the 0.618 mark. The 50% mark sounds fairly obvious. You'd expect that to be 110, right? 50% between 120 and 100. But what about that 61.8% mark? Well, for that, we can just refer to this easy formula. Let's say you had a bullish swing and you're trying to calculate the move from the lows. We take our swing high minus our swing low, so 120 minus 100, which gives us 20. We multiply that by the ratio that we're looking to calculate. So in this case, we had, say, 0.618. So let me calculate that right here. And let me also pull up my calculator so we can do this in tandem. So we have 20 times 0.618 that's 12.36, and we add that to our swing low, which is 100. So our 0.618 level is 112.36. Let's see if that matches with the calculations I've already done. 100 plus 120 minus 100 times 0.618, 112.36. And so that's how that 618% is calculated. Let's say you wanted to calculate the golden ratio this time, so the 1618. There, the value pre-calculated we have is 132.36. We're taking that same 20, this time multiplying it by 1.618, taking the 32.36 and adding that to the swing low, since we're looking to extrapolate on the bullish side, 132.36. Now say you wanted to extrapolate this on the bearish side. To do so, we would take our swing high minus this difference, and that would then allow us to extrapolate on the downside, both for that 618% level along with the 1618% levels. So hopefully this brief demonstration gives you an idea of how simple the retracement levels are calculated from. Now comes in the question, which swing high and swing low do we actually use? And for that, I thought it would be useful to have an example here. So for example, inside of XLK, if this were the chart, we have price action currently where it's at, I would start with first taking our largest swing high and our swing low on this chart and using that to build a general baseline in terms of this roadmap. So using our swing high to swing low that is still active, that high is 117.04 and that low is, I believe, this candle right here. Let's go ahead and see what the retracements look like using those two levels. So from that swing high to that swing low, we can see we now have our key Fibonacci levels. This is the 0.236 at 149.48, the 0.382, excuse me, at 154.73. The 50% mark is at 158.98. That 61.8% mark, 163.23, and that 786, 169.28. So we already have some brief places where we expect price to have some sort of a pause when it retraces its steps. So far, we see price has blown past the 236. We've blown past the 382 now. We had a bit of a pause there, but we've gone past it. Now we're at that 50% mark. 50% we've exceeded, gone to the 618. 50% acted as support. We've now fallen down to that 382% mark. And now we're trying to decipher, are we going back up to that 50% mark in XLK and maybe even back up to the 618 to retest to new extensions where we have 786? Or are we likely to retest previous lows here, 149.48, or maybe even something lower? To help answer that question, let's try and use some of the smaller, shorter swings in between this larger swing high to swing low. So using the smaller, more recent swing here, we can take our swing high to swing low. Let's assume that this is our swing low. That's still an assumption. If we continue to make a lower low, we need to adjust this. But using the swing low to swing high, we have a little bit of a cluster forming in some areas. Let's go ahead and identify those clusters. We have near that 1618 mark right here in that 786, that's cluster 1. We have cluster 2 using the 50% and that 618 of our smaller swing in conjunction with our larger swing, so this is another cluster. And we have our third cluster near that 382 level where price is currently chopping in between. So now if we can see this level hold and we see a close above this previous candle, which would be, say, our sign that we're looking at price to now continue moving away from this direction, that would suggest that we're looking at this cluster to hold somewhat and looking at 50% to be that next retracement mark, and then looking at 618 as our next stop in this roadmap. And beyond that, we have the price overlapping fairly nicely with that 786 and that 1618. If conversely price makes, say, a lower low here, we have to adjust our recent swing high to swing low, and we have this 149.48 level as our lower retracement level that can act as that last place that we may find some support in this overall swing high to swing low. So hopefully that gives you a little bit more of a practical example of how to make some clusters. We started with our swing high to swing low. We then created a smaller swing high to swing low with the assumption that this swing low will hold. If the swing low doesn't hold, then we need to readjust that. But if it does hold, we have some nice clusters starting to form here using just our retracements tool. Once we start to add extensions to this layer, you'll see how this becomes more and more dynamic or elaborate, where the clusters stand out a little bit easier. Now to try and find the Fibonacci Retracements tool, which I'm sure you guys have all been itching to do, head over to the Drawings tab. This is next to the Style tab and where you choose the time frame in the top panel. There, within the Drawing Tools tab, choose the Fibonacci Retracements icon, which looks like a percentage icon. Once you have that loaded in, all you need to select are 2 points, a swing high and a swing low. And once you let go at the second point, which I'll show you in a few different examples, you'll see that the ratios automatically plot. Now these are the settings that I have. I'll leave the screen so you can just hit pause in case you'd like to follow along. But with this, I'll move on to my chart so you can actually see where these lines and the setup falls into play. I have 8 ratios, 0.236, 0.382, 0.50, 0.618, 0.786. Those are the ones sub 1.0. And then beyond 1.0, I have that 1.272, the 1.618, and that 2.0 for that really stretch mark sort of swing, where we're really extrapolating the same swing on the upside. It's a 200% move from what we initially had in the first place. A few different points to call out. All of the ones greater than 1.0 are green for me. It's just color coded. I found that's a little easier. And that 50% retracement mark is a bright yellow, and it's also the thickest line on my charts with a weight of 3. So with that, let's head to our charts and configure some of these settings and take a look at the 4 different examples that we have. Now heading inside of ThinkOrSwim, I have a blank chart of XLK here one more time. Let's load in our Fibonacci Retracements drawing tool, so click the drawings icon, navigate down to drawing tools, and there select the percentage icon that looks like this, which will also say Fibonacci Retracements if you hover over it. Once you click that, choose any 2 points on your screen, doesn't matter what time frame chart or symbol you're on, just find a swing high and a swing low, and by default, you should see something like this. Now this does not look as intuitive as the ones in the screenshots I was just referring to, so let's go ahead and fix that. We'll edit our settings by right-clicking when you select the Retracements tool and select Edit Properties. Now here, there's a few settings I'd like to change right off the bat. I'll uncheck 0 and 1. I can leave them set to the weight of 2 with the same colors, but I'll uncheck them. Then the ratios that I'd like to have for outside of 1.0 are 1.272, 1.618, and then 2.00. Now for each of those ratios, if you remember, I said I set them to the color green and they're color coded, but each of them has a weight of 1. Now that 0.5 extension we can change to the color of yellow with a weight of 3. This one was the heaviest. Now we have a few different ratios left. So for 0.236, I like to keep that a little bit brighter, so I'll go with the cyan color there, but I'd like these to be different colors, not red. For the 0.382, I'll use a lighter blue here, so something like that blue. For the 0.618, I'll go ahead and use something like, say, this purple potentially. And then for the 0.786, I'll use the same blue that I used for the 0.382 one more time. Now each of those is set to a width of 1, and beneath that we can also see here we have the color, and this is the color for the actual retracement tool, the trend line. And for that, I'll change this to, say, that same blue. I like that blue, and let's set that to a dashed line with a width of 1. Now if I move this a little bit to the left and we click OK, we can see how that changes just a little bit, and it looks quite a bit nicer, I think, than what we had before. Now if I right click and click Edit Properties one more time, and you scroll down and click the Save as Default button, that will make sure that anytime in the future you use the Retracements tool, it loads with those same settings by default. And so that's how we have the settings now saved for the future. We've done this work one time. Now let's take a look at some examples here. So the first example I have for you is Procter & Gamble, and that's going to be Procter & Gamble, and we'll take a look at that on, say, a 5-minute time frame chart. So if I come in to Procter & Gamble, 5 minutes, we can see here that we have, for the most part, an uptrending market. Now the question is, we'd like to find what are the swing highs and swing lows we can use, maybe for swings that may still be active, and maybe for some places where if we've hit key areas, we may want to find places where price is likely to trade away from. So the most natural swing high, swing low that I think might still be active is this swing high to swing low. There we can see price has so far in this swing high, swing low hit that 50% mark, and then we've sold off from there. We've then gone on to that 0.618, acted as that next stop in this road trip, 0.786, next stop. Then we did break above, we went to that 1272. So far, did act as a bit of a stop. We have yet to hit 1.618. So now if you did have a bullish setup inside of Procter & Gamble on that 5-minute time frame, just as an example, that 1618 is acting as a magnet, which is that last level in this key ratio sequence, which has not yet been hit. After that, our next level comes in at the 200% price retracement mark, and that golden ratio tends to be one of those key resistance areas that we've discussed. So it might make a lot of sense to expect price to make a move towards 1618 before starting to see this act as something like a double top, where you start to have a bit more resistance come inside of Procter & Gamble. So that's Procter & Gamble on a 5-minute time frame chart. Now let me move on next to an example inside of the S&P futures. And here we'll look at this on a 30-minute time frame. Now inside of the S&P, let's start with our more obvious swing high, swing lows. So I'll take our swing high from there and our swing low down to 44.50. Using that swing high to swing low, if that is going to hold, then our 50% mark comes in at 4537.86. Now if we try and use maybe a near term swing high, swing low as well to see if this is also active. And what I mean by active is it has yet to still hit some of the upward extensions we have. So we still have the 1618 and the 200 still active, then that's where they come into play here. Now using both of those swing high, swing lows, we have a lot of lines drawn on our chart. Let's start by removing some of the lines that don't really hold any significance. To do so, you can use the Control key for all PC users or the Command key for all Mac users and simply click any one of these lines, and that then hides each one of those lines in this swing high. So if I Control click that and I want them to reappear, all I need to do is right click, click Edit Properties, and I can turn them back on by just checking these boxes. So if I go back and I rehide them, let's try and find what is happening with our current roadmap here. In our longer roadmap, we've hit our 0.236 extension and we've recently hit our 0.382 extension. We're looking at this area right here, this zone, so the overlap of our 0.786 of this recent swing, along with our longer term's 0.236 to act as a zone of support. And the next retracement that we have on, if we do continue to break to new highs, is our 50% mark, which is at 4537.86, and that also overlaps somewhat with our 1618 zone from this near-term swing, which is at 4529.04. So that gives us this zone using just the retracements where we're targeting price to head towards next as our next potential stop on this road trip. And we're looking at this zone right here to act as our support. If we continue to break below even that 44.85 mark, then we have 44.70 as our next major target, the 50% retracement mark. And you also have that 618 along the way that you may find helpful to add in as well if you want to try and dice that even smaller. So hopefully this helps to drive in the idea one more time of starting with our swing high to swing low. The more obvious, the larger swing high, swing lows are the ones I like to use first, and then starting to draw in some of the shorter ones as well. And you may have another swing that you'd like to draw in here as well if you believe that this is another swing low that will hold. That gives you another 50% retracement mark along with another little overlap confluence zone right here at that 0.382 with the 786 retracement. So by now, hopefully you've started to see a bit of a common theme. Let's move on to the next example, which is XLK. And I'll take a look at XLK on, a weekly time frame chart here just to mix things up. So if we come into XLK on a weekly time frame, I'll start with our first most obvious swing high. Here we've already hit even the 200% extension, so it's no longer active. I'll move on to our more recent swing high to swing low. So that's this one right here. And using that swing high, swing low, we can see as of right now in XLK, that 50% ratio is holding up to be at least somewhat of a key resistance mark. We've retraced away from there. Our next ratio up is that 0.618, which we've tagged once. We're looking to try and see if that retags one more time. And if we do break above that, 0.786 is next up for our stop that we think XLK is likely to hit. If we break above 177.04, then 186.85 and 199.33 serve as some useful targets they may look at for uncharted territory. Now, last example here, IWM. This is one that we've been talking about in our PowerPoints for some time. Let's start first with that daily time frame here, and if I load that in, off of our daily time frame using our Feb to March swing high, swing low, we can see along the way here, price has really respected those Fibonacci zones. We fell a little bit short of that 200% mark, but so far that 1272 and 1618 have been some nice zones where price has chopped in between. Now, if we try and extrapolate this one more time, so I come into our weekly time frame chart, and let's assume we have now seen our swing low for the near term. Our swing low, this was 188.09, this was 187.92, so we made a slightly lower low here. So let's use swing high, swing low. We can see that 50% mark overlaps pretty nicely with that 1618 ratio, so we expect that to be somewhat of a key level here. And on the upside, if we come in and we extrapolate where we think price is likely to stop along the way, 222.86 is next. After that, 232.36, and after that we have our 200% extension, which doesn't have any nice overlaps with the 1272 or the 1618 this time. So this would be the one I would pay more attention to, that major 200% extension, along with this key cluster zone right here, that 50% retracement mark, where we think there's likely to be some resistance as we try and make a move up towards that 200% mark. Alright, so we've covered a few different examples in this video. We started all the way at the beginning with understanding what retracements were, how they were calculated, did some manual calculations. We then set up our chart settings, and then we took a look at a few different common examples here with the notion of two different ideas. One being common to see retracements back to some of these key ratios for price to retrace and to act as resistance and support levels. And the second one is to try and project targets from our previous highs and lows for places where we think price is likely to go next, even beyond uncharted territory. For times like this, when we have price just making straight highs, we don't have any swing high, swing lows, this is useful to try and have things like that 1618 ratio, knowing that we expect price to falter just a little bit and have some sort of pauses at these key levels. Alright, I hope this deep dive into the Fibonacci retracements levels was useful for all of you looking to use the retracements tool in your everyday trading. In the next part, we'll move on to Fibonacci extensions and repeat a similar deep dive, trying to make the most out of that tool, understanding it from the ground up. We'll see you in the next part. Take care, everyone.